Foreign investors are sharply reducing exposure to Indian IT, with holdings at a 4-year low. Nearly 11,000 crore rupees has been pulled out in the first half of February alone. Jasmeet joins us with more details. Jasmeet, what are you pulling? Because clearly the sector has been under pressure. Constant selling is what we are seeing. The time when we are expecting that FIs will come back, they're continuing to sell.
Well, the FI overhang has been along with the sector over last 1 year. If you look at over 2025, as an entire year, we have seen the FIs have pulled on 74,000 crore and currently at the lowest when you look at the sectorial map. Let's quickly understand the scale at which FIs are selling. Well, total FI holding in IT is at a 4-year low level and dropped it to 4.49 lakh crore by the mid of Feb, which is down 16% in just 1 month and down about 38% over last 1 year. While FI has sold nearly 12,800 crore so far in FY 26 all alone, and this is the highest when you look at a sectorial heat map. Now, if you look at the scale of exit, we understand that 4 out of last 5 years, FIs have been negative on IT. We had COVID in 2022, which impacted the overall figure of 2022, and in 2025 had the overall global uncertainties, and 2026 we have the AI uncertainties continuing for the FIS. That's why the FIS being the constant seller in this. Well, we have also seen that the 2020, just to give the scale up to the users, the 2023 entire year had a net sell-off of 7,000 crore, but the first 15 days of February saw a net sell-off of 11,000 odd crores. So you understand the scale, where a 1 year versus at just 15 days of February month, this is after the Anthropic launched the AI tool, from which the overall perspective of AI helping IT companies change to overall AI replacing IT companies. Now, let's quickly understand the category-wise how the FIs has been selling over last 5 years. If you look at the figure, the overall FI sellings were the highest in 2022 and followed 2025 at 74,000 odd crore. Now, if you look at the Nifty index, how it has performed so far in terms of the performance from last 15th of February. So far in February, Nifty IT is down 15 odd %. And if you look at the stock performance, Nifty IT index is down 15%, while Infosys is the biggest loser, lost about 17 odd % in trade on the back of the overall AI fear, followed by top 5 IT names again tanking in trade. Now, what is driving this sell-off is a structural shift towards the AI, where we see that the overall AI service will impact the managed services, and the IT would see a structural shift towards consulting services, though managed services contribute largely to the IT at this current point in time. Well, the second is slower growth. The IT companies' valuations have been higher when you look at the growth perspective, the PEG ratio, but overall valuations are higher compared to global giant as well. The current Nifty IT trades at 12 to 14 times, whereas the global giant Accenture trades at 9 or 10 times. So the valuation is the second concern. Well, third thing is the global uncertainty with regards to the order cancellation and the overall global tech sell-off on the back of the AI fear. Now, if you look at the brokerage view, what they are penciling in, we see that the Jeffrey says the pain is not over yet, though they are still bullish on the sector. They are being selective in terms of the names they choose. While you have something like JP Morgan, what they see is they overall point out that the AI-driven sell-off is seeing a sharp correction in the IT names. While Nomura remains constructive, they say the sell-off is overdone and it's a front-loading aspect given the fundamentals of IT companies have not changed so far. Now, well, we also have 2 brokers that came up today morning in the trade. Now, what CSS says that the EPS growth turnaround is a picture to watch out for, not the valuation when it comes to the overall commentary. While lastly, HSBC expects a 14 to 16% impact on the overall revenue when it comes to the deflation that we see in the AI revenue. All in all, negative news flowing in for IT packs so far.
Okay, thank you so much for that. In fact, that's very interesting in terms of the data, Jasmeet, that you've pulled, because that categorically tells you as to what's happening in the IT space. And until the time the FIs don't come back, I don't think so we're going to see that return, because the PEG ratio itself is one of the concerning areas from a valuation perspective as well. So that's an interesting story.